Okay.
Hello, everyone. My name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is July 17th, 2022. And today I want to focus on why, although, as I've said in a previous episode, $24,000 for Bitcoin is the high probability technical target. The more likely target is actually 30,000. If that analysis interests you, then watch until the very end. Okay. Yesterday we talked about leading diagonals and fifth wave extensions. Okay, and I showed you how typically when you have a leading diagonal where you have a truncated third or concerted third wave, right? Let's use the word concerted because truncated typically when you're talking about impulses, wave advances in Elliott wave theory, means a little bit something different. Okay. So let's say concerted wave 3, right? Which is basically a minimum Fibonacci extension of wave 1. And it typically leads to an expanded or extended wave 5, okay? And that wave 5 typically targets the 1618, so the 1.618 Fibonacci extension of waves 1 through 3. This is what we where we left off yesterday and what we looked at, okay? And we referenced all of this in the wave theory, the the de facto or seminal work by Bob Prechter and AJ Frost, right? The book on Elliott wave theory. All right. So today we're going to look at why it's more than likely that 1.618 target is just a minimum target, and it's actually more likely that we hit the 4618 target. Okay. So let's start off with a look into the theory. All right. And as promised, I want to always go back to what I'm looking at, what I'm studying, how I'm forming these theories or forming these sort of conjectures, making these conclusions in the charts using background information from, manuals. Okay. And once again, I'm going to use Elliott wave principle, key to market behavior, the seminal work on Elliott wave trading. And if you go into, I believe we're on, so the Kindle version, page 35, you'll see that Prechter and Frost are talking about extended fits. Okay. So extended fits, basically extended wave 5s. Okay. And they're quite common in major bull markets in commodities. Okay. And basically they're showing how, and I'm going to make this bigger. Just bear with me one second. Here we go. They're showing how in these waves, how can I make it? Okay, this is a little tricky. There we go. Okay, so I'm referring to figures 1 through 9 and 1 through 10. Okay, specifically 1 through 110, 1-10. It's showing you the fifth wave extension. Okay, and that's actually the common extension that you find in bull markets and commodities. Okay, and so my entire thesis is that we just pivoted into a new trend, and that new trend is a massive bull market that is likely to last 4 to 7 months, thereabouts. Okay, so you see a regular wave 1, 2, 3, and 4. Okay, a conservative wave 3 you have in this diagram, and then you see an expanded wave 5, but that wave 5 expansion is such that you have an expanded wave 1, 2, 3, and 4, and then an expanded wave 5 within an expanded wave 5. So you have expansions in expansions. Okay, so this is a bit of what I believe is likely to happen, and I'm going to use some indicators to corroborate or buttress this theory. Okay, so we're back on our charts. Guys, if you're getting value, please like, share, and subscribe. On the 4-hourly chart, and I'm going to throw on some indicators here. You all know, if you're subscribed to the channel, I make most use of just pure price action, but from time to time, I think it's very useful to use some indicators to kind of gain another perspective. And as always, got the volume on, okay, and I turned on 3 important EMAs, okay. EMAs stand for moving averages, okay, and the E in EMA stands for exponential. There we go. Exponential. It's Sunday, everyone. Exponential moving averages. And I like to use these 3 in particular because they're Fibonacci numbers. The yellow one is a 21, the blue one is a 55, and the green one is 144. So we all know the significance of the 21 EMA. If you don't, just look it up. But that is typically your main trend indicator. Like if you're below the 21 EMA, you're typically moving down. If you're above it, you're typically moving up. Okay, so on the 4-hourly time frame, it looks like we're just about getting above all of our EMAs, which is a great sign in Bitcoin. And one of the reasons we were stuck around this area of 20K for so long is, one, because it was an important level, right? 20K represented a significant resistance or support level that was lost briefly and then regained. And so there's a lot of buying and selling. And also it's a nice round number. And you typically see that. Nice round numbers tend to attract a lot of trading, a lot of buyers and sellers. Oh, if we lose not 22K or 19K, if we lose 20K, it's over. If we regain 20K, we're back in business, right? Nice round numbers. It's a psychologically strong resistance and support level. So I'm not surprised that it's taken some time for us to kind of work through 20K, but it looks like we're actually retesting it as support. Okay, we broke it as resistance and we're retesting it as support. We're finally above the EMAs on the 4-hourly time frame. Right here above, you see my original target of 24K. But what I want to draw your attention to is now on a higher time frame. Let's switch to the daily. You can see that these EMAs tell a different story, okay? So now on the daily time frame, you see that we just broke above the 21 EMA. And remember, the 21 EMA is significant because it typically denotes the trend, the general trend of the market. And another thing I just want to draw your attention to is we've had 5 green daily candles in a row. Okay, we haven't obviously closed the 5th one yet, but thus far we've had positive price action for 5 days in a row. It hasn't been a huge, massive pump to the upside. We've only been up, we're only up 10%, but this basically represents what I always say is the leading diagonal. You're both in impulsive price action and consolidating at the same time, and you typically see that kind of price action when a trend is changing and you're going into a new trend, right, whether up or down, but at the same time that new trend has yet to develop strength because there's not a lot of people that are convinced of the new trend's establishment. So now this 1618 is exactly where our 55 EMA, which is represented by the blue line, is hitting. Okay, so that I think is a likely target, but I don't think we're going to stop there. And this is something that the VPVR, our horizontal volume indicator, is saying. Our horizontal volume indicator is basically saying that between 20,000 and 30,000 is an abyss. And just as we lost 30,000 and we went immediately down to 20,000, in the same way that we did that, we should theoretically break 20,000 and then matriculate swiftly up back to 30,000. So this horizontal volume indicator basically shows buying and selling done at all the various price levels, and it's basically saying very few people have bought and sold in between $20,000 and $30,000, and as a result, don't expect price to hang out anywhere for any extended period of time between these price levels. Okay, and I believe that. Okay, and so this is one really good reason. Okay, why using indicators, I think that 24K is not going to be a stop. It's just going to be a pit stop. Okay, and so once again, let's just pull the Fibonacci extension. All right, let's just drop down in time frames so I can pull this accurately. So what we're going to do is we're going to pull the Fibonacci extension right here, just like we did to get that $24,000 target. So extension of, 1 through 3, right? I think 3, you can say ends here. Retracement of 4, right? And let's just keep that on there, okay? Now let's dive back into the daily time frame, and we see that our more likely target is 30K. There's more buying and selling, which represents resistance because we're below it. There's more buying and selling at 30K. Okay, and you're getting that green 144 exponential moving average coming at 30K. Now, the most compelling argument for why 30K is most likely a target and more likely of a target than 24K is if you go into even higher time frames. Let's go into the weekly time frame. And remember, typically speaking, the higher the time frame, the more reliable the analysis, okay? If you go on the weekly, what do you see? You see a convergence of these EMAs. You see both the 21 exponential moving average and the 144 exponential moving average on the weekly time frame converge to a point at the 30K level, okay? And you see the confluence of the 4236, I said 4618 earlier, the 4236 Fibonacci extension, which actually, if you backtest a bit, represents what you typically get in extended extensions, okay? If you get an extended extensions, you typically see price coming to 4236. This is why I have 4236, 6854, and 11089, okay? These are all Fibonacci levels, important Fibonacci levels for extensions. So I like 30K. This is what the VPVR is saying. VPVR is saying 30K. My EMAs are saying 30K. Both the 21 and the 144 converging at 30K. And my Fibonacci extensions are saying 30K. So I think that 30K is more of a likely target than 24. That's my case, okay? Again, all of this is probabilistic. There's no magic ball. There's no certitude whatsoever. We deal in probabilities, right? As a professional trader, I'm just looking at what's more likely. So what I'm going to do, my plan, is I'm going to take this alarm that I previously set at 24, and I'm going to move it up to this level at 30. And again, if you look at just price action, look at what 30K represents in terms of price action, right? This is obviously we can see this in the VPVR, and there's a reason VPVR is showing this, but this is where most of the resistance is on the next move, right? Just looking at price action. You can do all of this, most of it, just looking at price action, but it's not bad to use indicators because they can be corroborative, right? So that's what I'm looking for. I'm setting that alarm now at 30K, and any short-term trades that I have are going to be I'm going to act on them only at that level, but not any time before. So when you're in a strong trend, up or down, and you're trading that trend, you want to get out of the way. Okay, so same thing in Dodo here. I'm looking at this 21 EMA because it's an important exponential moving average, and I'm not looking for any kind of short-term trade until we reach this level, right? Just like Bitcoin, I'm looking a little higher, okay? My VPVR showing that, okay, it's likely that around here there we hit some resistance, and my price action is saying around here is likely, okay? And then my EMA, my 21 EMA is down here, so it may move up as price comes up. So I think my alarm would be probably set around here. This is for short-term trades, okay? Long-term trades, I'm not touching anything, all right? Litecoin, same idea, same kind of thinking. You look at the VPVR, you look at price action, you don't see any major resistance until you get to this area right here, okay? So I'm looking between what? 82 and 100 for Litecoin, okay? Again, you want to be smart about this. You do not want to overtrade these moves. You don't want to overtrade these moves because the trend is just setting, and we have yet in Bitcoin to get major volume, okay? Major volume up and out of the previous downtrend, okay? Major volume will really, really support the trend change. And so we did get that in Ethereum, right? You see this major volume in Ethereum, but we have yet to get it in Bitcoin. I'm waiting for that in Bitcoin, and that is most likely going to come with this pump to 30K, okay? Same thing in Dogecoin. Yet to get the major volume. The 21 EMAs up here. We may get more of a pit stop in Dogecoin sooner than later, right? Because my VPVR is saying that around 8 cents is likely, but I don't think we're going to hang out too much there, to be honest, because between 8 cents and 14 cents, there's a huge gulf. Do you see how I'm using this? Cardano, same idea. You've got a bear cross of these EMAs, this 144 and this 21 EMA on the weekly time frame, but I think they're going to cross bullish once again in the time it takes for the price to get up here, okay? So what I'm seeing in Cardano, just looking at the price action, looking at the VPVR, it's showing that 79 or 80 cents is where you want to target before, for any short-term trades. Like, it's very unwise to touch the trend before you get to this area because there's a huge gulf there, there's a huge gulf there. This is what price action is saying. This is what the indicators are saying. All right. And that's pretty much it for today. If you guys got value, please like, share, and subscribe. Let me know your thoughts. Do you think Bitcoin to 30K is likely? And if so, what's your time frame? My time frame for that all is the next 10 days. Why? Because the new moon is on the 28th, right? That's in approximately 10 days. And you all know that trading phases of the moon is actually statistically, there's statistical significance in that indicator, okay? It's likely that we form a top of this next move to the upside before or around that time, right? Within that time frame, next 10, 11 days. And once we hit that new moon, it represents a top, and then we are likely to see a correction. So that's it from me. Hope this was helpful. Hope this was useful. Like, share, and subscribe. Have a great Sunday, my friends, and I'll see you in the next video.